Hi friends, welcome back to A to Z Accounting Pro. Okay, and this is our second video. In the first video, we have already discussed the legal structure and capital booking and a few sales and purchases of the company. Now today, we are going to discuss prepaid expenses. So what is prepaid expenses and how what is the treatment of the same in the whole financials of a company? Okay. So let us go back to our textbooks and see the definition of prepaid expenses. Prepaid expenses are recognized during the period in which they occur and carried on the balance sheet as current assets until they are incurred. And these expenses, whatever prepaid, whatever we are prepaying, are an asset to the company. So, what is the treatment of the same in the books? First of all, let us remember the golden rules and the practical strategy. How we can recognize the entry, the journal entry. Okay, most of you all already know the journal entry for the same. Even I have to explain the same in my words. Okay, as the name states, prepaid. You can see it's a prepaid expense. Paying in advance, something we are paying in advance for the service. The service will occur in a future period. It's not yet done or maybe not yet started. So whenever the service or whenever we are getting the benefit out of that amount, whatever we have paid for the company, we have to book the expenses at that time only. So that is why it's clearly mentioned, recognized during the period in which they occur. So here we are going to explain a simple example of a medical insurance of $12,000 paid covering the next 12 months. So it is I have just we are going to start it from 1st of August. So it's from 1st of August to 12 months we have paid for the medical insurance. Okay. What is the journal entry for payment? So going back to golden rules, we have to debit prepaid medical insurance and credit bank account. Why we are debiting prepaid medical insurance? Because we are following the accrual method of accounting. So the 12,000 whatever we have paid is not for the current period. It is for a period of 12 months. So we have to distribute the same to coming 12 months. So what is prepaid medical insurance? Prepaid medical insurance is an asset to the company because during this period we have paid $12,000, which the benefit will come within the next 12 months only. We haven't received any benefits, but we have paid the amount in advance. Okay. So that's why we have to create an account in the balance sheet, prepaid medical insurance. It's an asset, it's a current asset to the company. So this prepaid medical insurance account you can see in the balance sheet under current assets. And this is normal bank account because the money, the cash is going out of our bank account. So we are crediting the account. So here the asset, this is an asset, the asset is increasing. So we are debiting the asset account. Prepaid medical insurance account debited and bank account credited. So this is for during the payment, whenever we paid. Okay. Now what will happen after that? we haven't booked anything into the expenses. So for that we have to see when we are when the benefit of the same, the medical insurance, the actual benefit of medical insurance benefiting to the company or to the staff of the company. So for that we must have an agreement with the medical insurance provider. So just check what is the period. If it is, because here in this example it is 12 months, coming 12 months from August to July. Okay, from August 19, for example, from August 2019 to July 2020. This is for 12 months. The medical insurance expiry is on 31st July 2020. So we need to just prepare an amortization schedule. It's a very simple one, and check the medical insurance contract and find out the actual period. So here our company's actual period of medical insurance is from August to July. So this 12,000 we have paid to the medical insurance. On a monthly basis we can take 1,000 each. So this is just simple 12,000 because it's 12 months, 1,000 each. So from August to July we have to book 1,000 each into the profit and loss account. Only 1,000 each, because since we are closing the month, closing the accounting, the account monthly, there is a monthly closing procedure. Since we are following the monthly closing procedure, we have to book the expenses on a monthly basis. So at the end of August, on 31st of August or 30th of August, we have to book this 1,000 into the P&L, profit and loss account of the company. So what will be the entry? So this is an expense. 1,000 is a medical insurance expense for the company. So we have to book the concerned expense. We have to debit the concerned expense at the end of August. So debit medical insurance, debit the expense. As we are booking the expense, we have incurred medical insurance expenses of 1,000 in this month. So debit medical insurance and credit the prepaid medical insurance which you have debited earlier. Credit the medical insurance. This is first entry in August. So what will happen to the prepaid medical insurance then? Because the first entry we have booked 12,000, we have paid 12,000 and we have debited the prepaid medical insurance. Second entry we have credited medical insurance. So at the end of August, the prepaid medical insurance account will decrease by 1,000 and it will be only 11,000. This, there is an expense created here, medical insurance. This is our expense for the month of August, which will appear in the P&L of August. Okay, so at the end of August 31st, our prepaid medical insurance will be only 11,000 and the balance sheet will show, our balance sheet must show a current asset under prepayments medical insurance 11,000 only. In the same way, in September also we will book the same entry, medical insurance debit, prepaid medical insurance credit. Again 1,000 will be decreased, then 10,000. So we will do the same until the end of July, which is the end of the contract of medical insurance, and the whole 12,000 will be credited. So the debit 12,000 and credit 12,000, which will make our prepaid medical insurance 0, and then we have to open, or we have to get a new medical insurance contract. Okay, so now we are going to this is a very simple, I mean this is the same procedure we can follow for any of the prepaid expenses. Very simple. The only thing we need to check the contract dates properly, whether it is rent, medical insurance, general insurance, whatever. Properly check the period, the starting and ending period of the actual contract. Actual contract means the benefit, when is the benefit is coming to the company, actual benefit, when we are receiving the actual benefit. So we have to book the expenses whenever we are receiving the actual benefits. So this is here in this example, we are receiving these benefits over a period of 12 months. 12 months. So equally distributed from August to July, 12 months, 1000 each, which will make our financials looks very fine and proper. Okay. Now let us check the impact of these two entries, first during payment and second during amortization in the financials. So let us take out these two entries into our transactions list. This is during payment and this is during the monthly closing or amortization. So there are two entries we need to book. So here we will see, like in the first video, how the financials will be impacted here. Okay, now let us check for the first example. Prepaid medical insurance. It's we have already discussed. This is a balance sheet item. It's under current assets. It increased, debited, and the bank account we have, because we have paid from the bank, and bank cash balance decreased. Okay, now let us go to the trial balance and see, book this entry. Prepaid medical insurance 12,000 debited. Okay, so we will debit 12,000, debited 12,000, and the second credited bank account. So we have to credit the the bank account. Bank account is credited here. So first entry, we have booked, debited the prepaid medical insurance and credited the bank account. Here we have created a new asset called prepaid medical insurance, which will, you can see it in the financials. At the same time, your company's cash balance will decrease by 12,000. Okay, let us see. There is no impacting in this income or P&L statement, because both the accounts are in balance sheet only. Both are assets. One asset decrease and another created a new asset. So only we need to see in the balance sheet, there is a new heading, prepayments, and let us take this prepayments. What is prepayment? Prepaid medical insurance, prepayments. Trade and other issues. So actually this is the primary group and this is prepayments. So let us take this 12,000, here increase prepayment, and the cash and bank balance has to decrease by 12,000 also. So we have to book this 12,000 here. So it will be 500 minus 12. Our cash balance will be 488. So we have to show, because here it's 500 from the old one. Let us take the actual cash balance after this entry. So it's 805 total assets, and this actually this is a trade and other receivables, prepayments, a new asset created. So our balance sheet tallied here. Okay, now let us book the second entry also. Now this is only we have paid for the medical insurance, and this is for the second entry is for the amortization of medical insurance over a period of 12 months. So this entry we are going to book at the end of August, 31st of August. So it's medical insurance account in the P&L. It's an expense. An expense. It's increasing. We are paying for the medical insurance of the staff. So it's an expense for the company. So we have to debit the medical insurance and credit prepaid medical insurance, because this is we have already discussed now. So let us book medical insurance account. This is medical insurance account. It is G&A, general and admin expenses, insurance, the subgroup. Okay, if the medical insurance account is debit, medical insurance, and credit will goes to prepayments, prepaid medical insurance. Let us find out the prepaid medical insurance here. See, we have there is 12,000 already, the last one, and let us credit this 1,000 here. Okay, now our prepaid medical insurance account will decrease by 1,000 and it will become now 11,000. Okay, this is the closing balance as of 31st of August 2019. Now we have booked an expense of 1,000 and the same 1,000 decrease from an asset. This is a current asset of prepayments. So this entry impacts the P&L or income and expense statement. Okay, let us then book this entry also into the financials, income and expenses. Okay, here selling and administration and general expenses will impact this entry because this is a selling and general admin expense. Medical insurance is a G&A expense. This account is debited. So let us take this balance of selling and balance of medical insurance 1,000 expenses we have booked, and now it was 5,000 before because we have incurred an expense, we have paid for an expense in the month of August. So our profit decreased by 1,000 and it became 4,000. So only this entry we have posted. Now the second one, the impact of the same in the prepaid medical insurance, which will be in our balance sheet. So one side is in income statement, which is the expense side, and the second one is in our prepayments. So where we have booked these prepayments, prepaid medical insurance in the balance sheet. Yeah, prepaid medical insurance, it's already booked here 1,000. So our total prepaid medical prepayments is 11,000, which we have to show it here. It shows now 12,000. This is an earlier one. So after passing that entry, our balance in prepayments will be 11. Now balance again after these two, we have posted these two entries, so balance sheet tallied. Okay, now what we have done, prepayments decreased. It is balance sheet is showing at the end of 31st of August it is 11,000, and our loss, the current profit also decreased by 1,000 and now it is 4,000. So 804k assets and 804k liabilities. So let us see the impact of the same in statement of changes in equity. Only one change, our profit for the current period decreased by 1,000, which will be 500 is the capital and 4,000 is the net profit, total 504,000. So this is how the prepayments will be impacted the financials. Okay, the main only we have discussed the simple, very simple way, and this is the same can be, we can use the same method for any complex situations. The only The only issue will be we have to find out the actual contract period, or the time of actual beneficial, or the recognition of the expenses. The recognition of the expenses whenever the benefit is coming out of that payment, whenever the company is benefiting. Okay, so here we are, since we have already discussed this, I am not going to explain this one in more detail. If any one of you have any questions, any queries on this prepayments, please comment. And also another important thing, please subscribe for the upcoming videos. And thank you all for watching.